Welcome to another week in review. We're looking at the trading week of July 21st, 2025. We'll get some data out of the way. Thankfully, there isn't a ton this week. Monday, we have no major data. Tuesday, we have Powell speaking at 8:30 a.m., so that'll be interesting. He's delivering remarks. I'm not sure how much he's going to be, how much insight he's going to give to anything or any decisions coming up next week for the Fed. Obviously, he can't say much on that, but it'll be interesting to see how the market reacts to what he's saying. Wednesday, we have existing home sales 10 a.m. Again, not super important. Thursday, we have 8:30 jobless claims and 9:45 manufacturing and services PMI. So those could have could bring some volatility to the market for sure. 8:30 a.m. we have durable goods. Again, not really that important. So we do have impactful earnings this week. So the big things I'm watching are Tuesday morning LMT, Coca-Cola, and GM just for defensive sectors. So that'll be interesting to see how that moves the market. Wednesday is the more impactful day. We have two Tesla, Google, and IBM reporting after hours. So just a note there, if you're in any positions, especially on the NASDAQ, just be conscious of the fact that we have those big names reporting. Thursday, we have Intel as well. I don't expect a ton of market movement from that, but it'll be interesting to see how semis start to move with Intel reporting. So NVIDIA obviously is going to be the big one for semis, and they're a few weeks out still. So not too bad for earnings either. We are starting to get into the meat of earnings season, so those after hours moves are going to start to ramp up a little bit. As far as the expected range this week for the S&P 500, the at the money straddle on Friday is pricing about 60 to 65 points of range this week. So just under 1%, which is fairly normal for lower volatility summer trading. So, nothing crazy there. The week last week was quite interesting. So again, we're a range-bound market. We found ourselves continually framing weekly value higher for, consecutive weeks at this point, basically months at this point. So every single attempt to sell this market has still been lifted. And there's a lot of noise online. There's a lot of chatter online about, there's a big sell coming. I've been saying this for a little while now. There's really not much for buyers to worry about as long as we're staying above prior all-time highs. As long as we're staying above this breakout. We've seen every single attempt to sell this get basically stuck. Wednesday is a really good example. I'll talk about that a little bit in detail, but basically until we're actually accepting back below 6160s, we're accepting back below this gigantic trading range that we broke out of, which has been so pivotal in this market for a couple years at this point. Buyers still remain in control. The weekly time frame did shift to balance. The daily is one time framing up. The monthly is one time framing up. The weekly shifted to balance as we swept out the low of this short-term trading range that we put in. But with that being said, the low that we put in on Wednesday is very, very good. So we have a lot of excess left on this low. We swept out a prior 7 or 8 day balance trading range. We had zero acceptance below, and we had initiative buying that took us straight back up and put in new weekly highs. So there's really nothing bearish about what's happening here, in my opinion at least. The daily continues to frame higher. The monthly continues to frame higher. The weekly does shift to balance on ES. It does not shift to balance on the NASDAQ. So that's another thing to consider here too, is that the NASDAQ is also continually framing higher, broke out of that range and didn't even sweep the low, but also left a beautiful excess low that we have from Wednesday's session. So as far as bias goes, I try not to hold a bias, as an intraday day trader, but as far as what's happening, higher time frames continually lack ability to accept lower. That's, I think, the big key here, is that every time we've seen initiative sellers try and take this down, there's no ability to get lower. So again, until really we start to lose 6160s, kind of have to assume, in my opinion, that dips are going to continually get bought. And, we're going to see two-way trading, especially as we form trading ranges up here. We're going to see two-way tape. We're going to see short opportunities. But as far as the bigger picture goes, buyers are in complete control as we remain outside of this multi-year trading range that we broke out of. And we could see that happen on Wednesday as well. We had a huge amount of excess get put in. Then we had people, I'm sure, that tried to short this entire day all the way up and got absolutely torched in the process. And there's a lot of reasons why you shouldn't have been looking short on a day like this. And I think the simplest explanation that I can give is when we have this type of low, so when we have solid volume, we have a huge amount of excess put in on the session, this is a very clear change in character in the short term. So we have an M period spike lower that happened the day before. So people were looking to continue, and rightfully so, they were looking to continue the short trade lower. But then once we did this, once we put in the highest volume on the week into this low, accelerated, and the tape flipped like this, and we closed with a neutral extreme day, meaning we broke both sides of IB, we closed on the outside of the opposite extreme of IB. Statistically, these have a very good chance of continuation the following day. We also put in an M period spike up on this day as well, which increases those chances that this is going to continue. So you can see we had the M period spike down. The day prior, we had some messy conditions. We had a retrace up, again, completely normal. We had a retrace up, and then we had another continuation sell down. But the moment we started doing this, the moment we put in this low, and then we closed back outside of IB, back above that prior attempt to spike us lower, this was only up. And this obviously forced a multi-distribution trend higher. We left a poor low on that day as well, which again, indicative of unfinished auction and the fact that we would continue higher. We did that on Friday, and then we sold ultimately and consolidated back inside of this trend day range. And again, this is completely normal. This is completely normal action. We had a really nice low put in. We had acceleration trend higher, multi-distribution, and we filled in the poor structure the following day. And in the process of doing this, we also shifted weekly value higher and shifted weekly POC into 63.35s. So this is fairly normal. And as far as what these days look like and what it leaned to for the following sessions for continuation, this entirely made sense to me. After seeing what happened here, after seeing this close, this move up made sense. Friday, again, makes sense. The odds of continuation immediately from trend are fairly low. It would have to be a very strong trending market for that to happen. You can obviously see that's not the case. This is a range-bound market. It's summer trading. It's lower amounts, lower volume, lower volatility. Participants aren't at bigger. Participants aren't at desk. So this is normal as well. What it means for me as far as Monday and as far as into next week, we have two things. So we have open B period singles from Friday. So we did have initiative sellers try and take this back down. They were not successful. It was also OPEX, so that's something to consider too. But they were not successful. There was an exhaustive low put in at 63.20s. So we had no acceptance or ability to see continuation selling lower. This poor low should get fixed. So generally poor lows will get fixed within one to three sessions about 60% of the time. So there's something to be said about potentially revisiting this low fairly soon. Where I'm looking is the B period singles at 42s and 23s. So I want to play how this range breaks. In my opinion here, if we see down into 63s, we see this low get fixed. So if we see this poor low get fixed, we bid back above, it can be a failed breakdown trade. Holding back to 23s would rotate us, or should rotate us back up into 42s. Any acceptance we have outside of 63.42s, the moment we break away, or if we break away, I should say, from these single prints at 42s, it's staying long for me. And I'll continue to look for the extension trades up into 63.80s and eventually up into 6400s. That's where I'm looking. So expansion this week could be a little tricky, especially with earnings. We also have, the range priced in is fairly limited, but the thing to consider for me is that, higher time frames, weekly's in balance, but higher time frames and monthly and daily continue to frame higher. So if we start accepting back outside 63.40s, again, it's just stay long and I'll look for 63.80s, and hopefully we can get all the way up into 6400s. So where that changes, at least in the short term, if we see the initiative sellers that stepped in here at 63.40, so if we see a move back up and we see a fail and a lower high and no ability basically to get back above this excess from A period, so call it 42 to 45, if we see initiative sellers stick a lower high here and put in excess again, then the odds of us continuing in the short term are fairly limited. And what we'll probably end up seeing is just backfilling last week's range, and we'll stay inside of this trading range and probably come back down and test 6300s. So again, generally biased for me. I'm more so looking for a decent dip to buy on an intraday basis as opposed to trying to fade this market. I think that could potentially form 23s to 17s here. So if we see a nice sweep out, if we see a punch below this low, we fix this low, we backfill this area down in here, and we see a decent bid, step in and rebid 23s, that failed breakdown could be a really nice long trade to get us back up and extend into 6380s. And again, I'm not super interested in fading this market, but again, I have to respect the fact that we're range bound. So if we see initiative selling 45s to 42s, again, up in here, up in this range, and we stick a lower high on the daily, then what we could see potentially is reversion back into this gigantic range that we continue to form. Buyers really, in the short term, buyers really aren't in trouble until we start losing last week's value area low. So if we start losing the 6290 area, we start losing these prior weekly opens, then we're probably going to be testing back down into the base of this excess low at 6255s. So again, I'm not bearish in the slightest when it comes to this market at this point in time. I just kind of have to respect the fact that we haven't been able to sell it any lower. And again, looking for those, you can trade both sides of this, obviously, but looking for those, liquidation lows and those dip opportunities have been the easier trades and more fruitful in the short term as this market continues to try and frame higher. So playing around 40s, playing around 20s. And I think, the best long setup we could have would be cleaning this up, sweeping this low, potentially we punch into 17s and rebid 23s, get that failed breakdown, and then we punch back up into 6380s. And then again, I'd only really be interested in looking to fade this if we fail to break away from 6340s again, and the initiative sellers we saw into this high show up again and put us back below this range. So NASDAQ is going to be the exact same thing, basically. Important to note that the low, it's not a good low on NASDAQ from Friday, but it's better than a yes at least. But this range up here was very, very nasty on the NASDAQ. We had even before OPEX, we had a huge amount of size, just basically get stuffed all day up here. So I'm a little cautious with the NASDAQ. The NASDAQ is framing higher on every higher time frame. So again, like, strictly speaking, there's nothing aside from the fact that the order flow up here was extremely nasty. There's nothing really screaming to me that, again, that I have a reason to really look for a big fade here just yet. So I do think that's coming. I do think it's coming on both indexes. I'm not going to try and time it. I never do. I usually want to see a balanced range form and fail to look for a larger short rotation, on a multi-day basis. I'd rather see, higher time frames frame lower as opposed to framing higher and trying to pick a top. It's the market goes up and to the right, 90% of the time, and trying to short it on a higher time frame basis is often a losing battle. So it's easier to see those trading range form and have those ranges fail as opposed to, trying to pick a top, which, is a large majority of retail market participants are, constantly trying to pick tops because it looks cool, and they're eviscerating their accounts and puts in the process. So I don't see a reason to do that. So going to be an interesting week with those reports as far as earnings go. Again, this has not been an easy market to trade. I know, there's a lot of people out there that'll say that this market has been extremely straightforward. It has not. It has not been. These trading ranges, in hindsight, can look simple. When you look at the rotations, but as these form, this has not been a super easy market to trade. And I think hopefully as we eventually get out of summer into September, I'm hoping we get more large directional moves, like conviction directional moves, as opposed to some of this range bound trading. Just to kind of make it a little bit more interesting, because you can kind of get lulled into a sense of complacency here. But I think as far as when to expect a little bit more volatility, it would be more so in the end of summer back into September. And I think we are still going to continue to have some of these slow grinds and whippy two-sided tape for the next little while. So hopefully that helps. Again, big thing paying attention to is this range and how this breaks, or how we potentially revert on sweeps of either side. I think that's going to be the key. I think that should probably hopefully start a decent move for the first couple of days of the week until we get into Wednesday, and then I think it'll just be all about the earnings that we have. So hopefully that helps. If it does, please leave a like on the video. Please subscribe to the channel if you haven't. I would appreciate it. Thanks for your time.